Some freelancers hire a VA or a subcontractor and just pay them. No paperwork, no forms, no follow-up. Other freelancers do one extra step before that first payment clears. According to the IRS, businesses that fail to file required 1099s face penalties ranging from $60 to $310 per form, and if the IRS finds willful disregard, that jumps to $630 per form with no cap on the total. The freelancers who skip the paperwork think they're saving time. They're actually handing the IRS a loaded weapon. By the end of this video, you'll know exactly what to file, when to file it, and how to make sure your deduction is bulletproof, so you're in the group that scales their business without a tax surprise waiting on the other side. What the 1099 NEC actually is ***. Let's start with the basics, because a lot of freelancers confuse this form with what they receive from clients. You get a 1099 NEC when a client pays you. You send a 1099 NEC when you pay someone else. That's the role reversal most people miss the first time they hire help. The NEC stands for non-employee compensation. The IRS brought this form back in 2020. It had been retired since 1982, specifically to separate contractor payments from other types of 1099 income. Before 2020, contractor payments lived on the 1099 MISC. Now they have their own dedicated form, their own deadline, and their own penalty structure. Here's what the form does. It reports what you paid a contractor during the tax year. You send one copy to the contractor. You send another copy to the IRS, and you file a Form 1096 as the transmittal cover sheet if you're mailing paper forms. If you're filing electronically, which the IRS now requires for 10 or more forms as of tax year 2023, you skip the 1096. The right move is to understand this form as a two-sided street. You're not just a 1099 recipient anymore. The moment you pay someone to help run your business, you become a 1099 issuer. That changes your obligations completely. The $600 threshold and who actually triggers it. Here's the rule: if you pay any single contractor $600 or more during the calendar year for services, you're required to file a 1099 NEC for that person. That $600 threshold applies to the aggregate across the full year, not per payment. Pay someone $200 in March, $200 in July, and $250 in November, and you've crossed the line. The threshold applies to services, not goods. If your VA buys supplies on your behalf and you reimburse them, that reimbursement generally doesn't count toward the $600. What counts is what you paid them for their time and work. There are some important carve-outs. Payments to corporations, including S-Corp and C-Corp, are generally exempt from the 1099 NEC requirement. The exception is attorneys. You file a 1099 NEC for attorney fees regardless of business structure. Your individual tax situation may change this math slightly, but the corporate exemption is the one that catches freelancers off guard most often. You hire a VA who runs their business as an LLC taxed as an S-Corp. You may not owe them a 1099, but you don't know that until you collect their W-9. The deadline is firm. 1099 NEC forms are due to both the recipient and the IRS by January 31st of the following year. That's an earlier deadline than most other 1099 types, and it doesn't move much even when January 31st falls on a weekend. Miss it, and the penalties start stacking immediately. How to collect W-9s before the first dollar moves. This is the step that separates freelancers who breeze through tax season from those who spend February chasing down contractors for their social security numbers. The right move is to collect a completed W-9 before you send a single payment, not after, not when tax season rolls around, before. The W-9 is a one-page IRS form. It captures the contractor's legal name, business name if different, address, taxpayer identification number, either a social security number or an employer identification number, and their business entity type. That last piece is what tells you whether the corporate exemption applies. Here's what I do: make a W-9 a non-negotiable part of your onboarding process. Before a VA gets your login credentials, before a subcontractor gets their first project brief, the W-9 comes back to you signed. Build it into whatever tool you use: a simple email template, a contract attachment, or a platform like DocuSign or HelloSign. If you use a payment platform like Deal, Gusto, or even PayPal for Business, some of these tools collect taxpayer information automatically. But do not assume the platform is filing your 1099 for you. Verify that. Some platforms issue the 1099 on your behalf. Others collect the data and leave the filing to you. This varies by platform and by payment volume, so check your account settings before year-end. One practical note: if a contractor refuses to give you a W-9, the IRS says you must apply backup withholding at a flat 24% rate on their payments. According to IRS Publication 1281, backup withholding kicks in when a payee fails to provide a correct taxpayer identification number. Withhold 24%, send it to the IRS, and document everything. That protects you. Worker misclassification, the risk nobody talks about. Here's where the stakes get higher. Filing a 1099 NEC isn't just about the form, it's a declaration about how you've classified the worker. You're saying, this person is an independent contractor, not my employee, and the IRS has opinions about whether you're right. The IRS uses a multi-factor test, sometimes called the common law test, to determine whether a worker is truly an independent contractor or whether they should have been classified as an employee. The key factors include behavioral control, financial control, and the type of relationship. If you tell a VA what hours to work, what tools to use, and how to do every task step by step, the IRS may decide they look more like an employee than a contractor. Why does this matter? Because misclassifying an employee as a contractor means you owe back payroll taxes, both the employer and employee share of Social Security and Medicare, plus interest and potential penalties. The IRS's voluntary classification settlement program exists precisely because misclassification is widespread. According to IRS data, employment tax misclassification is one of the agency's priority enforcement areas. Here's my take: if your VA or subcontractor sets their own schedule, uses their own tools, works for multiple clients, and you're paying them for a result rather than supervising the process, you're almost certainly on solid contractor ground. If they're working exclusively for you, following your exact process on your schedule, that's where you need to think carefully and possibly talk to a tax professional before the relationship deepens. Protecting your business expense deduction. Now let's talk about the money. Under Section 162 of the Internal Revenue Code, ordinary and necessary business expenses are deductible. What you pay a VA or subcontractor for legitimate business services qualifies. That deduction can be significant, especially as you scale. But here's the catch most freelancers don't know about. If you fail to file a required 1099 NEC, the IRS can disallow your deduction for that expense. The tax court has upheld this position in multiple cases. You paid the contractor, you have the bank record, and the IRS still says, no deduction because you didn't report it. The right move is to treat 1099 compliance as the price of admission for the deduction. They're not separate things. The filing requirement and the deduction are linked. Filing the 1099 NEC is how you prove the expense was legitimate and that you met your reporting obligations. I cover taxes and retirement for self-employed workers, and the pattern I see most often is freelancers who take the deduction and skip the form because they didn't know the form was required. Now you know. Don't let a $60 filing fee avoidance cost you a $3,000 deduction. For your records, keep copies of every W-9 you collect, every 1099 NEC you file, and the corresponding payment records. The IRS statute of limitations on assessment is generally 3 years from filing, but it extends to 6 years if the IRS believes you understated income by more than 25%. Keep everything for at least 6 years. That's not paranoia, that's standard practice. Your action checklist before you pay anyone. Let's put this together into a clean sequence you can actually use. Before you pay a contractor anything, you need 4 things locked down. 1. Collect a signed W-9. Do it before the first payment, no exceptions. 2. Track cumulative payments to each contractor across the full year. Use a spreadsheet, your accounting software, or whatever system you already have. When someone crosses $600, flag them for a 1099. 3. Determine whether the corporate exemption applies. The W-9 tells you this. Box 3 on the W-9 shows their entity type. If they check S-Corporation or C-Corporation, you generally don't owe a 1099 NEC except for attorney fees. 4. File by January 31st, not February, not March, January 31st. If you're filing 10 or more forms, the IRS now requires electronic filing per regulations updated for tax year 2023. Use the IRS Fire System or a third-party service like Track 1099, Tax 1099, or similar platforms. That's the whole system. 4 steps. None of them are complicated. The only way this becomes a problem is when you skip step 1 and then scramble in January trying to get a contractor's information after they've already moved on. Disclaimer and next steps. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. If your contractor situation is more complex, multiple workers, international VAs, or blended payment arrangements, take this framework to a tax pro and have them review your specific setup. The framework here is solid. The application to your exact numbers and structure is where professional guidance earns its fee. If you found this useful, subscribe to Freelance Finance. We cover the tax and financial playbook that nobody hands you when you go out on your own. Got a specific 1099 question or another freelance tax topic you want me to dig into? Drop it in the comments and I'll work it into an upcoming video. Next week, we're getting into the new tax law changes that every freelancer needs to know about heading into 2026, including what's changing and what you need to do before year-end. Don't miss it. This video may contain affiliate links. I only recommend tools I use personally.